morning. You're watching The Market right here in 80 now with me, Ayesha, Faridi and Nikunj Dalmia in the studios. And we've come to the grand finale for the week, a truncated one at that. Policy day today, but a good recovery in place for the markets yesterday. We managed to claw it back all the way to that 19,500 print and conclusively above that level. So yes, we've been meandering around in that range of 19,400 on the downside, which also we've reached this week, and 19,700 on the upside. Yesterday, of course, it was the US bond yield retreat, and that cheer clearly rubbed off across the global street. We were no different than that. For the last 10 sessions, though, we've seen L&T as well as ICICI Bank, Infosys, they managed to lead the recovery, at least in yesterday's trading session. So IT, auto, they've been seeing some buying interest. And yes, PSU banks, they were the ones which were under pressure along with pharmaceuticals. Having said that, it's a very concentrated call on the large cap heavyweights. They are the ones which are really calling the direction, at least for the index.
Ayesha, it's like a week has come and gone and there is no pronounced trend. I mean, you would have hoped that even though it's a truncated week, you would have got a directional move, whether Nifty will go below the range or when Nifty will bounce right up the range. In this week's price action, frankly, it's not been a week where you could say that, okay, markets have given you any kind of a decisive move. And the surprise this week actually has come from none other than HDFC Bank. Who would have thought that a drag on the market, HDFC Bank, actually would be the ledge on which the market fall actually would get arrested. This week, look at HDFC Bank. Compare that with what the Nifty has done or the Bank Nifty has done. And frankly, the V-shape recovery, if I may use the V-shape here for HDFC Bank last 7-day price change, I think it's an interesting one.
It's a classical V, in fact.
Yeah. I mean, I never thought at the beginning of the week you would actually see this kind of an comeback from HDFC Bank, which has acted like a ledge. So whether it's HDFC Bank or Reliance or whether it is some other heavyweight, bottom line here is markets are not breaking out and markets are not going higher. I think we are typically in a range where we're going to spend time, and you'll spend time just at a time when there is price discovery which will happen ahead of the earnings season. Globally also, while there was a spike in bond yields, uptick in crude, all that frankly has got arrested. The concern now is the FI selling. FI selling, I think, is large. That is something which is coming at a time when there is a global macro ripple, and that is something which cannot be ignored. Now look at that number. Thank you domestic institutional investors, thank you retail investors, thank you HNI investors, but it's a selling in Indian stocks at a time when just about everybody is gung-ho on what is happening in the world. If the selling continues, the downside could be more pronounced in the short term. But if history is something to go by, and what both of us have reported over the years, is that every time an FI is an intense seller, if you invest in the market, you actually benefit from that. So I don't know what will happen in the next couple of days, but next couple of weeks and next couple of months, if you buy this fall when FIs have sold in FI-dominated stocks, you actually would be rewarded.
But I wonder why the selling, and it's not like this selling is a minuscule number. Yes, okay, I mean, yesterday's was 521 crore rupees, which in any case, standalone is not a very small number. But we've seen this week 2,700, 2,750, 1,361 kind of sellers from the FIIs.
So, see, each one has a different kind of a compulsion. But the prima facie reason, I think, is the spike in bond yields. So, which is, if you are a foreign institutional investor and global allocator, what are the options in front of you? You would say, look, the back home American benchmark rates, which is the 10-year paper, is giving me about 5%. I get 5% I get 5% a short return. That is a very impressive number because historically, you've not got that kind of a return in American bonds. Or you say that, okay, I'll chance my arm, I will take a risk of currency and volatility, and I will go into emerging markets like India. Nobody will go to China, they will come to India. So at India right now, if you're coming, there are state elections and there is central election cycle. Markets are not exactly very cheap. So it's a toss-up. 5% of a short return or a projected return,
high risk, high return. Scenario,
so a lot of money is gravitating because of that, and the dollar index has also shot up. And frankly, the markets in India are not very cheap. I mean, I mean, it is like a cheery consensus in the world right now in terms of where the pricing is. And what has Buffett always told us? That you pay a heavy price for cheery consensus. So I think it's perfectly fine to imagine what is happening. Also, a lot of private deals are happening, a lot of IPO market activities happening, a lot of blocks. Suddenly the block deals have stopped. So a lot of things are actually happening. So I will not read too much into the flow, but if the flow pattern is anything to go by, every time foreign institutional investors have been compulsive sellers, I think there's a compulsion here. You should benefit by buying some of the stocks they're selling, not because of valuations, but because of the back home compulsions.
Oh yeah, and that's exactly what the DIIs for sure have been doing. Let's also take stock of what the global setup is looking like this morning, because much unlike yesterday, it's not really a cheery handover from the US equity markets. Yes, the bond yields continue their retreat, but Asia Pacific stocks have been trading higher ahead of the US jobs report. That's going to be another critical data point coming in this evening. So absolutely flat pretty much across the board in Asia as well, while there are aberrations like Hong Kong, which is scaling higher by nearly 2%. That's a 300-point gain. Japan is absolutely flat. Korea flat. Periphery markets like Australia, about a 0.5% uptick there, and it's flat for Shanghai as well. But the Nifty implied open rate adjusted for the GIFT Nifty and how we shaped up yesterday, that's indicating some more upside for us, marginally higher at that, and that's already indicating levels of 19,600 for us. So that looks pretty okay. And I think, like you said, the key data points, besides, of course, what we get for the US economic parameters, is really what the bond yields do and what crude does from here.
See, GRMs have collapsed. And GRM is like a canary in a coal mine, which is it tells you where demand is moving. So crude demand is not very high. You can pump up the market artificially high by cutting demands to a certain level, but that's not holding true. So while you saw an uptick when the OPEC nation and the non-OPEC nation, they decided to cut production, the demand follow-up I think has not come back. Otherwise, the GRMs would have not expanded. Crude prices are struggling to stay above. So the natural course of direction for crude, both technically and both based on the fundamental demand structure, I think is on the downside. So while crude becomes an irritant now and then, but more and more evidence is now visible in terms of historical patterns, and I think we'll show perhaps the data in the course of the day, which is that there is no linear trend that every time when crude has gone higher, what has happened to the markets. So I think crude is in a manageable zone right now. Inflation is not spiking higher unless we get some kind of a global ripple. I don't think from an inflation standpoint it really matters. Now, since you have MPC, we'll talk about it. And if you frankly ask me between the last MPC and today's MPC, what has changed? I mean, nothing has changed. I continue to maintain that Reserve Bank of India communication was very clear that inflation is manageable. We are ready to fight it out, but we cannot call that a victory on the inflation. So I think the line which we used to summarize the inflation MPC mood point last time was that the guns which had gone back to the barracks, the guns have come out. But I don't think the guns today would be used to fire. So you're keeping your guns ready in case inflation goes something here and there, you will fire. If RBI was worried about inflation, I can assure you, Ayesha, they would have not reverse the entire ICRM measures. I mean, in fact, everybody is now talking about the market liquidity is tighter than stronger. And global inflation is manageable. So Reserve Bank of India, I think they will not raise a victory flag, no Kesariya from there. I think it is not going to be a green flag. It's going to be a white flag, which is that we are at peace right now, but we are ready if there is a problem.
And we'll follow the Fed.
Exactly. Fed bhi kuch nahi karega, trust me.
Yeah, okay, status quo, that's what we are expecting. So pretty much going to be a no change, non-event kind of policy. Yes, surely we are going to look out for comments around, the downside risk from inflation, the inflation trajectory per se as well, CAD, forex reserves, etc. In fact, let me take it across to Ankur Mishra as well. He tracks the MPC pretty closely. He joins in to tell us what to expect.
Yes, we have arrived at Reserve Bank of India, where in a few minutes from now, RBI Governor Shaktikanta Das will detail the monetary policy, and all eyes will be there. What is his commentary on the liquidity situation? Because remember, in the last policy, there was a surprise element of incremental CRR, which was imposed on banks due to the situation arising from the withdrawal of rupees 2000 notes, and hence it was a targeted liquidity liquidity withdrawal program, and later Reserve Bank of India announced that ICRR will be taken back in a phased manner. Now it is important to see what is the liquidity situation, especially ahead of the festive season, where banks and NBFCs are expecting a demand and as far as the on-ground situation is concerned. Apart from that, what are GDP and CPI targets, whether or not Reserve Bank of India maintains the target which has been detailed out in the last monetary policy. The expectation last time for FY24 was given 6.5%, and also on the inflation front, the vegetable prices have softened as per the anticipation which was there in the last monetary policy. Although the last month's number were at 6.8%, but it was below the expectation of 7%. But Reserve Bank of India is unlikely to be in the mood of softening its stance on inflation as and when the situation warrants, because it still remains above the comfort range of Reserve Bank of India. Apart from that, there are always other announcements apart from monetary policy in this meeting. So we will be expecting more announcements for banks as well.
Let's take the market discussion forward. We've got Kunal as well as Naresh joining in this morning as always. Kunal, Naresh, hi, morning. Kunal, quite a steady recovery yesterday. In fact, this morning too, it seems like it's going to be a follow-through. 19,600 is the Nifty implied print. Do you think it's going to be the same set of leaders? HDFC Bank, Reliance to some degree, and technology?
So, good morning, Ayesha. I think it should be a better mix than of the market, hopefully today, than it was yesterday. Now, interestingly, 2 days back when the index recovered, or when the Nifty made a low of 90,300 approximately, we formed a strong bullish hammer candlestick pattern, and bullish hammer candlestick pattern generally requires confirmation. So we saw the first leg of confirmation which we saw yesterday. Now today, assumingly if the index opens up 50 points higher and say in the second half, if we manage to sustain this 90,600 plus levels, then we could be looking at a possible breakout back again above the 50-day moving average. This, I believe, could be a very strong case of a possible change of trend for the indices. So historically 50 DMA has been a major pivot point for the indices. Whenever we manage to trend or trade below this level consistently, we've seen the trends reversing as well as going down for the indices. But if you manage to conquer back the 50-day moving average on closing basis, I think that should be a strong case of a possible turnaround and then a start of a fresh uptrend for the indices.
Okay. Naresh, hi, morning. What do you think is going to lead the recovery further from here? Will it continue to be HDFC Bank?
So I would expect a little bit of everything as of now. We are yet to break out to give a significant trend in at least our leadership scene. For now, it would be a little bit of HDFC Bank, a little bit of Reliance, and a little bit of other banking names as well as IT. So for now, we are making that recovery, trying to form a base around 19,300, 400 levels. It's once we cross 19,750, that is where the reversal gets confirmed. Similarly, on the Bank Nifty, we are trying to form the base around 43,500, 44,000. So for now, watching out for some bit of a recovery and looking out for stocks which can show leadership from here on, to look out for the fresh leaders which could be coming in this move.
Okay, let's talk stocks and what Kunal and Ayesha are betting on this Friday morning then. Kunal, what's on your radar?
So I'm going with stocks which are riding on very high degree of momentum. So individual names, first one is Aban Wonderla Holidays. That stock is looking quite charged up. Consistent, I think fifth or sixth consistent consecutive price up move for the stock price. Scaled past about that 800 levels yesterday on an intraday basis. So I'm expecting a follow through upside for Wonderla. Yesterday I'd given a target of 820, revising it slightly higher to 830. Stop loss could be trailed to 770 from current levels. And the second would be a buy on MRPL. That stock is also showing signs of a potential breakout, trading at 98, 99 levels. Look out for targets of 106, stop loss at 96.
Okay, still betting on the mid and small caps. Naresh, what's on your list?
So looking at two stocks which are a little contra. First is a buy on HCL Tech, which has seen a little bit of a dip in the last few sessions. 1200 to 1230 is a good accumulation zone. Expecting a bounce back from here back to towards previous all-time highs. So stop loss at 1200, target price of 1350. Second is a buy on Bandhan Bank, which has been consolidating around the 245 to 255 mark. Once it sustains 255, 257 would be a breakout. Yesterday's dip gives a good, say, a risk reward entry at current level. Stop loss at 240, target price of 275.
Okay, interesting stock ideas coming in there that you need to keep on your radar this Friday. As also a lot of stocks as well. Both Bajaj Finance and Tata Motors are going to be in focus. So let me take it across to Sumit and get in some more details on both. And Sumit, that much awaited fundraising got announced. Well, that's at par with what the market was anticipating. We've already seen a run up in the stock, but I think the point to highlight is that Bajaj Finance valuations are still cheap.
Well, yes, it's definitely cheaper if you compare even with pre-COVID levels and pre-ILFS levels. That's what Nikunj sir was also mentioning. At that time, the valuations were at around 7.5 to 8 times, and current valuations are around 6.1 times. And post this fundraise, if you see, the valuations for FY26 basis price to book comes down to around 4.1 time, and for FY25 basis, if you see, the valuations come down to around 5.1 times. So valuations definitely look cheaper, and this fundraise also does indicate the fact that the company is seeing a high growth potential going forward. And do remember that even after this fundraise, the company's return on equity would still be about 20% level, which is the best in the industry, slightly below than what SBI Card does, but the business is different. In the NBFC level, Bajaj Finance ROE would still be the best in class and highest among its peers in NBFC sector.
You know, that's the point. The valuations are cheap. Ultimately, what matters is when before ILFS crisis, all NBFC stocks were going through a sugar rush. And at that point in time, Bajaj Finance was enjoying a pedestal positioning. So 2013 to 15 or 2012 to 2017, you would say that there was a peak bull market in NBFCs. And if you compare the valuations of Bajaj Finance at the peak of the bull market versus now, the sector has changed and Bajaj Finance has emerged as a formidable player, and their balance sheet and their return ratios have improved, but valuations are lower. So it just tells you that the markets right now are not really chasing Bajaj Finance as a stock, even though the repute of Bajaj Finance as a company or NBFC which has survived the storm, I think is something which is evident now. So growth capital coming in, attractive valuations, or not attractive valuations, but valuations below the historic average. These are factors which in the near term will actually propel Bajaj Finance higher. So if you own the stock, please don't sell. If you want to buy the stock, well, the time to buy a stock like Bajaj Finance typically is that when market goes through a temporary disruption, which is what happened post Ukraine war, post what we saw when there was a huge FI selling at the beginning of the year. It may not be the best time to buy a cherry consensus, but it is a stock where you certainly don't want to sell. It reminds me of what HDFC Bank did between 2005 and 2020. The banking sector per se went through a mess. But HDFC Bank, they kept on surprising us. Remember, Ayesha used to say, number kahan se aate hain? No NPA problems, formidable growth. They kept always 30% growth, no NPAs. There was a problem in the steel sector, there was a problem in the electricity sector, but HDFC Bank and Kotak surprised you. I think that is what Bajaj Finance is. I mean, history repeats itself, but it's only, courses remain the same, horses change. And that's the situation for you. The course is India, and the horse earlier was HDFC Bank, now it is Bajaj Finance.
Absolutely. Tata Motors though, what's the update here? Seems like JLR volumes have been quite impressive.
Well, in fact, it has increased both on Q-on-Q and YY basis for the second quarter, and this clearly shows that there has been signs of chip improvement and supply constraints are also receding for Tata Motors specifically. Now, the retail volumes have witnessed a good growth across all the markets, and what analysts are now understanding is that the order book continues to remain strong on the back of strong retail demand, and they're also expecting that the JLR EBIT margins would be around 7.7% for FY20, which is a good number in fact, and the FCF guidance that they have given for Q2 also make the analysts believe that the company could quite easily achieve their full FY24 FCF guidance of around 2 billion pound, and this would be most likely coming in the second half, and that would be on the back of working capital improvement, strong demand, and also given the fact that the company is looking to reduce their debt. So all in all, things are improving for Tata Motors. The cash flow guidance continues to remain strong for the company. So nothing negative so far coming in when it comes to the Q2 updates for Tata Motors.
See, Sumit, it's been a ranked outperformer. I think for this year, Tata Motors would be right up there. It is ITC and Tata Motors, which in a sense have been ranked outperformers. And the JLR business operationally has turned around. So the template that they will reduce debt, the template that they would be a net debt company soon, I think that is something which is well known by the market. And that is something which markets, if you frankly ask me, are also factoring it in. Now the surprise bit for JLR is that EBIT margins, their JLR retail volume business is picking up. So at a time when we've talked about a slowdown in China, we've talked about concerns in Europe, they are actually not losing a lot of market share. And I don't know if there is a breakup here, Sumit, but I think they've also had their launch of the EV vehicle globally. So I think there could be a slim chance, I don't have the detail with me, that the new model has done well for them. And that is the reason why the numbers are looking, up. So if that is the story, then this could be again an indication that the new model, which is the EV model for Tata Motors or JLR in this case, that is acting decent amount of acceptance. Look, markets are looking for a good idea. The subsidiary of Tata IPO is going to be going public very soon. I think Tatas have already filed for DRHP. Yeah. The trigger earlier was operating leverage, and now it really could be, the absolute comeback by JLR. And by the way, the stock, I think for 3 months has consolidated now, Kunal?
Yeah, 3 months. At 620-30 levels.
Yeah. So it has consolidated, a little bit of surprise. Tata Motors subsidiary going for DRHP. It is a Tata company which is going public, after a while now. So the stock will be warm, largely because of news flow and consolidation has happened. And it's a stock where I think the triggers in the short term will keep it higher.
Oh yeah, and as soon as Tata Tech filed the addendum to the DRHP just about 2 days back, 10% of the issue, remember, has been reserved for Tata Motors shareholders. And that's why you've been seeing such escalated volumes as well in Tata Motors for the last 2 trading sessions. I think it was 8 million shares traded, if I'm not mistaken, yesterday. So high volumes there. But thanks, Sumit, for joining in and flagging off the triggers for both Bajaj Finance as well as Tata Motors. Let's slip into a quick break on that note. But as we do that, here are some more stock ideas coming in from Saurabh Mukherjee.
As we've made public in our small cap portfolio, Little Champs, we built a position in RHI Magnesita. I think we perhaps discussed that once or on your channel. Again, in Little Champs, we've taken a significant position in Rainbow Hospitals. It's a Hyderabad-based maternity and pediatric hospital chain, the most profitable hospital chain in India by our view, and growing rapidly. There's more action coming. There are more Little Champs that are in the pipeline. So both in our mid cap and in our small cap portfolios, we're building some concentrated positions in other interesting companies who we think will do well. We are still loaded up heavily on HDFC Bank. I've heard lots of stories about HDFC Bank and HDFC Limited. I think many of them are stories built on pure fiction. As HDFC Bank's pre-close update suggests, this bank is growing liabilities at 30%, which is quite unbelievable. In a difficult environment to pick up liabilities, HDFC Bank has picked up 30% growth in liabilities. Remember, the first 3 months of this calendar, a quarter of India's liabilities came to HDFC Bank. So we believe we remain large holders there. And we think the current environment bodes well for the bank. Plus, the integration we think will go far better than many other people out there expect it to go. GST collections are in decent shape. Corporate tax collections are in decent shape. Overall tax collections are not growing as fast as I think were budgeted. Remember, the budget expects 14% growth in tax collections. I think that'll be difficult to come through. So my reading is after the general elections are done, there is bound to be a pullback in government spending generally. And this whole PSU CapEx story worries me a little bit. I think people are getting too excited about a story which simply doesn't have legs in it.
Back with the market right here in ET now, the GIFT Nifty indicating a solid upside for us, 0.5% higher, so that's a good follow through from where we left it off yesterday. It's indicating a price of above 19,600 for the index. But a lot of news flow as well that the market is going to be reacting to, and it's in ET now Newsbreak confirmed the government has extended SBI Chairman Dinesh Khara's tenure till end of August next year. Ankur Mishra, my colleague who broke the story, joins in with further details.
Yes, in line what we reported here at ET now, government has extended the tenure of current SBI Chairman Dinesh Khara for 10 months. Now this extension has been done for 10 months, keeping in mind the age criteria norms of State Bank of India, which has allowed the extension till August 31, 2024. Remember, Dinesh Kumar Khara has been instrumental in making the State Bank of India over 1% ROA. The bank had posted best ever quarter in the Q1 of the current financial year of over rupees 16,000 crore, and hence it seems that government has rewarded with the extension of term to Dinesh Kumar Khara. Apart from that, there is one more announcement which is made by government. Now the current MD of State Bank of India, Ashwini Kumar Tiwari, has also got an extension, and this extension is there for 2 years. His term was getting fulfilled till January 2024. Now the 2 years extension means that he will get time till January 2026.
Okay, we leave it at that, Ankur. And in the latest from the aviation sector, Indigo Airlines will now be charging a fuel surcharge per sector and distance the passenger is flying. In fact, the fuel charge will help the airline offset constantly rising ATF prices. Sameer Dikshit is here with more.
Now, this was very much anticipated, seeking the rise in the turbine fuel prices by the oil companies in the recent past. And now Indigo Airline has taken the big bold step and has announced that the airline is going to introduce a fuel charge effective from 6th of October. This simply means that an additional cost will be levied on the air passengers, and this will result in the rise in air fares for the common man or for the air flyers. Now, this fuel charge will be based on the distance travel. As per the chart shared by the Indigo Airlines, up to 500 kilometers, it is going to be rupees 300. Similarly, for every 500 kilometer travel, the price is going to increase. For example, up to 1,000 kilometers, 500 to 1,000 kilometers, it is going to be rupees 400. And if the distance is above 3,500 kilometers, then the fuel charge is going to be rupees 1,000. So this additional 1,000 is going to be levied on the air ticket, and this simply means that the upcoming festive season, or even if you are planning for traveling through the through Indigo, then you have to shell out more money. Now, this decision has been taken in the light because if you see, since June this year and up till October, the ATF prices have been raised by around 32%. In the month of October, the prices have raised by around 5%. For September, it was somewhere around 14%. Similarly, the prices have been raised, and this has resulted that the ATF prices in metro cities, whether it be Delhi, Mumbai, Chennai, Kolkata, it has crossed the rupees 1,10,000 mark per kiloliter. And ATF, or the aviation turbine fuel, it constitutes to somewhere around 50% of any airline's operational cost. So Indigo, in its statement, has mentioned that there was no other way but to come up with this fuel charge so as to absorb the extra pressure that was being levied because of this rise in ATF prices. And this fuel charge has been introduced by airline effective 6th of October.
Okay, Sameer, we leave it at that. And FMCG giants Godrej Consumer, Adani Wilmar have both come out with their Q2 operational updates. Let me take it across to Vinny and find out details on both.
Looking at Godrej Consumers first, when you look at the update that has come in this time around, nothing exciting in terms of an update, similar to what we saw in Marico as well. So what we're seeing is weak sales commentary that has come in the Q2 update for the company. Volume growth is slower than what the street was expecting, so that is going to be a concern, especially in terms of growth in home and insecticide business. Now, yes, the company did highlight in terms of healthy constant currency growth in the Indonesia business, GAUM business, so that is what is doing well. But in terms of overall, when you look at it, consolidated revenue at that consolidated level, they are expecting just a mid-single digit volume growth, double-digit constant currency growth, like I mentioned, in terms of sales of the international business. But India business, low single-digit sales growth is what is expected in INR terms. So sales growth, yes, a bit of a concern, a weakness that we're expecting in terms of the volume growth for the company. Though on a year-on-year basis, they're expecting an expansion in terms of margins. Let's not forget that inflationary prices have come down a bit as well, so that could be something that will support the margins. But in terms of the growth, that is a bit of a concern that the street is watching out for. That is what happened to Marico as well. Now, in terms of Adani Wilmar, on the other hand, has given a very strong operational update compared to GCPL or a Marico, because when you look at it, yes, what they're seeing is rural for them has started seeing a recovery. So that is a bit of a different commentary compared to what we're seeing in terms of the other two companies. Profitability for the quarter, they said that yes, that's a bit under stress. Sales has seen a decline, but FMCG business, they're expecting a growth of 25%. Edible oil business is a mid-single digit growth, that is a 5% growth in edible oil business, and industrial business also volumes are expected to be a 25% growth. So these all volumes are expected to be stronger as well. In terms of food and FMCG, also an 18% growth in terms of volumes. So that is something to watch out for, because rural commentary is stronger compared to the other two peers of the company.
Okay, that's Adani Wilmar, which is going to be on our radar this morning. And as crude prices have seen quite a bit of slip, Singapore GRMs as well have fallen to the lowest since the 7th of July. Now, what are the implications on sectors like refiners and OMCs? Somit is here with the math.
Well, companies like MRPL, Chennai Petro, Indian Oil Corporation, BPCL, HPCL and Reliance Industries continue to remain in focus given the fact that Singapore gross refining margin, which is the Asian benchmark for refining margin, have come down to around $4.45 per barrel, which is the lowest level that we have seen since July 7, 2023. Now, compared to its recent peak of $15.4 per barrel, the gross refining margins have declined by around 70-odd%. Now, all product prices are down, and the reason behind this decline in gross refining margin could be higher Chinese exports, given the fact that there are also news reports which suggest that Russia could be easing the ban on fuel export, and also given the fact that there is a higher refined product inventory in the US market. Now, what would be the impact of this lower gross refining margin on the oil refiners? Now, every $1 per barrel drop in the gross refining margin impacts MRPL's revenue by around 700 odd crore rupees on an annual basis. It impacts Chennai Petro's EPS by around 30-odd%. For Indian Oil Corporation, BPCL and HPCL, it decreases their earnings by around 14 to 16-odd%, and for Reliance Industries on a consolidated basis, it lowers their earnings by around 4 to 5-odd%. However, for oil marketing companies like Indian Oil Corporation, BPCL and HPCL, there is a silver lining, and that is the fact that there is a sudden drop in crude oil prices, which have led to higher marketing margins for these oil marketing companies. Now, marketing margins have revived given the fact that crude oil prices have dropped below the $85 per barrel mark from $97 that we have seen recently few days back. Now, on the back of this, the gross marketing margin for oil marketing companies on petrol have increased from 1.7 rupees to around 10 rupees per litre, and on diesel, the negative margin of around 6.1 has now come down to around negative 3.5. So, marketing business is reviving for the oil marketing companies, but the fact that refining margins are declining is the refining business that could see the impact for the oil marketing companies and other oil refiners going forward.
That's Sandeep Subbarwal joined just now. Sandeep, good morning. What should we start with? Yesterday's World Cup inaugural match. Should we start with that? Should we start with Tata Motors?
He's been watching Asian Games. He told us yesterday.
Oh, is it?
Yeah.
Ajay, when's the India match? It's Chennai 8th, right?
Yeah, India, Australia.
You're going?
No.
Why?
He's going to Ahmedabad for India, Pakistan.
You got the tickets?
जुगाड़ चल रही है.
संदीप जा रहे हो मैच देखने अहमदाबाद?
No. Can't make so much effort.
It's the sitting capacity is of the stadium is actually 1 lakh plus.
Yes.
Yeah.
I mean, it will be an experience.
Of course.
You're going?
I don't know.
I'm not going, I can say that. Okay. Away from cricket, Sandeep, markets, couple of things. Tata Motor dispatch numbers. Indigo has put a fuel surcharge, something which you've not heard, them doing earlier. And then if one really looks at Bajaj Finance fundraising plans, they're just doing the classic, which is that raising capital at a time when capital is available and when growth is clear for them.
Yeah, so I think Tata Motors continues to surprise positively, both in terms of sales as well as cash flows. And I think that thesis got established early part of this year. The stock is still cheap relative to the entire auto pack and possibilities of improving balance sheet, and it's also reasonably under-owned even now. So I think Tata Motors remains well placed. So I think it has low downside, and as markets stabilize and move up, it could move up much higher. So what else were we talking about?
Tata Motors, Indigo and Bajaj Finance.
Yeah, Indigo, it's very surprising. I don't know. They can price the ticket whatever they want. So this fuel charge thing, maybe it's a way to avoid the additional GST on it or something. I don't know what. what's the logic. But overall, I think Indigo is very well placed today in the context of what's happened to Go Air and what's happening to Casa, etc., and the pickup in travel. Now, the only issue with Indigo stock over the last couple of years has been that the ex-promoters come and sell periodically and in huge amounts, and that subdues the stock price, which could again recur after a couple of months. So I think that's the concern.
Sure. Let's in fact look at these charts because Interglobe Aviation was a big mover yesterday. I think the stock held out by 2.7% or so. IRCTC as well held out quite a fair bit in trade yesterday. Kunal, on the charts, how are they both looking?
So both of them are attractive. IRCTC is a lot more attractive because the stock, which had been a huge underperformer when the entire rally for the railways had started, or the railway stocks had started off. I think from there on, now most of the other railways names, the likes of RVNL, IRFC, etc., they're going through their own phases of time-wise, price-wise correction. But IRCTC is looking very attractive, about that 700 mark. In fact, this is the third consecutive day yesterday where the stock had shown positive price action, good volume action, as well as strong indicator positioning for the stock price that generally puts the stock to a possible breakout about that 740.50 mark, which the stock had tested a couple of weeks back. Interglobe Aviation could also be an interesting name because the stock yesterday showed actually a bearish crossover, the 50-day moving average crossing below the 100-day moving average. So generally to negate that, the stock has to show a very stronger price action in the next couple of days. So if that's the case, then we could be looking at a possible turnaround for Interglobe Aviation. But I think today's and the next 2 days could be very crucial for the stock in terms of a short-term time frame.
Rajesh, you had a view, I think, on Indigo on Tuesday, right? And after that, the stock went down. Then it has gained. Do you think the stock is? Do you think the stock can gain further altitude?
Yeah. So the view is the stock. First of all, if we see the rally when we saw crude go up to 94, the stock did not correct much. It went from 2400 to 2350 only, and recovered in the last two sessions. Yesterday was a good confirmation, and now we could go towards that 2550, 2600 mark. At 2600 is where one could expect a pause for now. So it's a short-term trade with a target price of 2600. The only concern is that had there not been the promoter selling, the stock would have rallied much more, and the trend could have been much more stronger across the board. So for the current view, the view is 2600 for the short term.
Bajaj Finance, just looking at what the brokerages have been saying after the fundraising got announced, and it's a buy from Jefferies, target price of 88.30, and has been the call from most brokerages on Bajaj Finance. Kunal, a quick read through on the charts of Bajaj Finance.
So again, a very attractive chart. So earlier what used to happen is Bajaj Finance, Finserv, they both used to move together or in tandem with respect to the price action. But this time around, the price action has been solitary, more stronger and powerful for Bajaj Finance. Finserv, I think, is still down some 250 odd points from the previous highs of 1700 odd. Bajaj Finance, on the other hand, I think is just about 1% away from its previous highs of 8,050.54 on the spot levels. Even yesterday, the stock showed a bit of a cool off from the intraday highs, but then the way in which the stock has run up in the last 2 months itself indicates that there is stronger degree of outperformance in this name as compared to the other peer or its immediate peer. So I would believe Bajaj Finance looks very attractive. 8,050 could be just a nominal breakout which one could be looking out for, but I think it's more of a hold from current levels.
The one other stock which is going to be in focus, and Nykaa just came out with its operational update. They've talked about the net sales value for both beauty and personal care as well as the fashion segment to actually show an uptick ahead of the festive season and into that as well. While it's been delayed, so the numbers are not digested in the second quarter. That's only going to come in Q3, but they're pretty upbeat about that. In fact, what they've said is that they expect the beauty and personal care business to see a net sales growth of 20%, which is much higher than the averages that they have clocked off late. Sandeep, a relook at Nykaa at 147 levels?
Management commentary seems positive, but I think the key is on profits. So I think that this is one of the companies among the new generation companies which got listed 2-3 years back, which has not incrementally shown any improvement in profitability. If they are able to do that, then I think the stock could do well. But for that, we'll need to wait out.
Zomato hit a fresh 52-week high yesterday, 105. 55 has become 105. It was at 55, I think, in beginning of the year. And 55 has become 105. What a year it's been for Zomato. 77% higher. Actually, 50 has become 105. Vinesh?
45 has become 105, right?
Yeah, I think
was the low?
The low was 40 point something.
40 point something.
Like a multi-bagger.
Yeah.
But 150 became 40.
Also, yeah.
150 to 40 and 42, and it is still not at an all-time high.
Yeah.
Surprisingly, Zomato is still not at an all-time high, even though when it was at 150, that time there was no guidance that they will ever think of actually delivering profit. And now that operating leverage and the pricing discipline and the delivery charges, Zomato Gold, all those factors have kicked in, that they actually are talking about, brokerages are talking about a PAT of like a 3-digit PAT for FY25. That's incredible for a company which was reporting a 3-digit PAT loss. So from a 3-digit PAT loss, we are talking about the 3-digit PAT profit. And Sandeep, better late than never, देर आए दुरुस्त आए, हिंदी में कहते हैं सुबह का बोला शाम को घर आता है, भोला नहीं बोलते हैं. All these companies have realized the importance of an auction market, which is listed market, which is that respect cash flows and deliver. Do you think this is just a multi-year trend now, and Zomato or a Policy Bazaar or a Paytm, they will not stop here?
The Policy Bazaar and Paytm have no, let us say, sort of business model which has entry barriers, or where it's a sustainable business model in terms of profitability. The entire improvement in profits of, let's say, a Paytm is coming out of the loan disbursements they are doing and the commissions they earn out of it. The core payments business, the competitive intensity is only increasing. Same is with Policy Bazaar. Zomato was always more uniquely placed because it's in a duopoly with Swiggy, sort of. And there it was only a question of the management realizing and the two players realizing that it doesn't mean like they don't need to kill each other, because they are the only two players which are there all India. So I think that's happening now, and the operating leverage then tends to be very high. So my guess is Zomato should do well long term. When to enter becomes a question, because when stocks move up in a straight line, it's tough to buy at any price. So I think, so I never bought it. So we'll see if we get opportunities.
There are reports doing the rounds in PB Fintech that perhaps SoftBank may be looking at, selling stake about almost 2.5% or so, offloading it via a block deal. Let's see whether that happens today or not. That's that on PB Fintech, but Macquarie has come out with a note on metals. Let me take it across to Lisa and understand what stance they're taking.
Right, metal companies are likely to be in focus today and in a positive way, and this is on the back of a note coming in from Macquarie. Well, they're quite bullish on the metal space because according to them, strong domestic demand is expected to continue, and even the strength in domestic steel prices, that is also likely to benefit the steel companies going forward. And they have hiked the target price anywhere between 26% to 45%, the highest upgrade coming in for JSPL. They have upgraded the stock from neutral to outperform. They've hiked the target price by 45% to rupees 808 from earlier 557 per share. JSW Steel, though they have downgraded it to neutral from outperform, but they have hiked the target price by almost 31% to 841 from earlier 641 per share. For Tata Steel, they have maintained an outperform, hiked the target price to 151 from 120 earlier. On Hindalco, they say that outperforming weighting is justified on the back of strong global downstream as well as the domestic upstream business, and they have hiked the target price for Hindalco to rupees 562 from 516 earlier. And lastly, on Coal India, they said that the healthy dividend yield as well as steady earning, that will support Coal India stock price, and they have also hiked the target price for Coal India to rupees 322 from earlier 245. So well, yes, metal companies will be in focus today on the back of bullish note coming in from Macquarie.
Okay, that's that on metals as well as Coal India. GCPL, that's the other one which is in focus. The Q2 update is hinting at low single-digit organic, rupee sales growth, which is weaker versus what the earlier expectations were. So a downgrade coming in from the house of Morgan Stanley. And yesterday you heard Marico as well come out with a bleak Q2. Sandeep, Do you think giving a skip to these rural-facing FMCG plays is prudent right now? Because the rural end of the economy hasn't been able to show a recovery up until now.
I agree it's not happened up till now, but I think these when these downgrades come up or at a time when the stocks don't perform, I think that gives the opportunity for us to look at some of these stocks. So Marico, I think, is one of the least innovative of FMCG companies, so I've never liked it. But GCPL is something one could look if it dips due to any negative adverse uh, uh, reactions to quarterly numbers, etc. Because I think that's one company which has got a good business model, and ultimately, I think now after almost 1.5 years of subdued demand, consumer demand uptick is only a matter of time.
First when I looked at the numbers from Bajaj Finance and HDFC Bank quarterly numbers, they were impressive, and I thought, okay, the industry economy is growing and lion share of growth is perhaps going back to the big guys. That's the reason why Bajaj Finance AUM growth is 30%, HDFC Bank credit growth is 20% plus on such large balance sheets. But yesterday when I looked at numbers from small finance banks, Utkarsh, Ujjivan, they are growing at 35 to 40%, which means they are also growing. Now, if there is so much of credit growth, and we are talking about retail credit growth here, Sandeep here, then why is there a slowdown in the rural facing categories? Why is there a slowdown when I look at rural FMCG, rural autos? If the credit growth is so strong in the retail end, whether it is a big bank or small bank, कोई तो उधार ले रहा है.
So I think overall system credit growth will be, I think, more in the mid-teens because the PSU banks, etc., are growing much slower, and the larger NBFCs and the private banks are going faster, and some of the new generation banks. Secondly, consumption, the parts non-durables are not typically funded. The durables are funded. So on that front, there is some buoyancy, but still demand is subdued. I think so. I think much of the demand growth for many of these companies is either taking market share or essentially, especially in the case of banks, I think it's more towards working capital, etc. I guess.
The long trade, Kunal, in PSU banks, which in a sense was the standout feature, I think, in the last week of September, that got challenged when markets fell. Is that trade back now?
So I think these stocks have not yet gone through that correction. So I think 2 days of correction only, which has happened for PNB, Bank of India, Bank of Baroda. But I would believe that maybe one more leg of correction is due for these stocks. But I don't believe that the entire trend is over for the PSU banking names. I strongly believe that there's a much more stronger cycle of uptrend which could be in line for these PSU banking stocks. So I think it's about timing the sector and the stocks back again when they come back to their individual mean reversion points. There's a phase where these stocks go into a flurry of price action. For example, what we saw in the likes of, say, Central Bank, Bank of Maharashtra, UCO Bank, etc., the two-digit names, where these stocks had gone through a very sharp, strong spike in a short period of time. But post that, we've actually seen the stock consolidating first and then going through a correction. That generally indicates that these stocks are getting due to that mean reversion point. But on the other hand, the only positive light for the PSU banking stocks is emergence of the larger cap names, the likes of Bank of Baroda, Canara Bank, even SBI to a larger extent is coming back closer to that 600 mark time and again. So an eventual breakout for these stocks could also happen. So my sense is that the baton is shifting from the mid cap end of the PSU bank, mid cap, small cap to the traditional large cap names.
Naresh, what about IT? I mean, yesterday you had an Infi TCS and Infi ADR as well jumped up. Are these dead cat bounces, or should you read into this trend, or is it a trend to begin with?
So it is very stock specific. So if you look at TCS, that's made a meaningful recovery. And for the fact that from the highest point, the high for the stock was closer to 4,000. Today the stock is at 3,600. So it's barely down 12 to 15% from the all-time highs. At the same time, you have an Infosys, which has made a decent recovery, but from the all-time highs of almost 1,900, 1,950, the stock is at 1,450, 1,500. So the trend is very clear. We are seeing a shift in terms of leadership. TCS is taking that leadership mantle. Same is the case with an HCL Tech, which is now, say, from the all-time highs of 1,350, 1,380, the stock is at 1,250. That is setting up for a move going forward. That could be the first one in the large cap IT names to actually make a new all-time high. At the same time, when we look at mid caps and small caps, they've just continued in their all-time highs. Some of them have made meaningful bounces, but there are names which are showing signs of coming out, but better played post the numbers. For now, I would still like HCL Tech and TCS.
Okay, HCL Technologies, TCS, and it seems like that SoftBank block has already happened in the pre-open. About 1.13 crore shares have traded hands. It's a 2.5% equity, and that's exactly what the reports as well were indicating, that a stake worth 80 crore rupees is going to be on the block. SoftBank selling into PB FinTech. But that said, Sandeep, just want to bring, get you back to IT names. You think it's worth buying some small position in IT ahead of the Q2 numbers, or rather the earnings?
I don't think it makes sense so much because of the fact that all the macro indicators are indicating a further slowdown in growth rather than a pickup. So some brokerage notes came out preempting, trying to forecast that next year is going to be very good. But there are no indicators indicate that, if at all, the rhetoric within the US Fed and the monetary authorities out there is about keeping rates higher for longer, and rates could go up further, creating a further slowdown in the economy and further cut in discretionary spending. So I think we should wait it out. There's no real hurry for buying IT stocks per se.
Sandeep, what's going to be the trigger for Reliance Industries? I don't know. I was skimming through some of the reports, and it seems like, retail valuation definitely is much more attractive. But another 2 years is what that news story indicated for a possible IPO. But that said, I mean, you think the stock is going to languish for the next 2 years?
There are no real triggers. So I think the biggest trigger for re-rating was when they said that we'll go zero net debt, and that was what which created the re-rating. Then they announced a flurry of new announcements into new segments, etc., which will actually generate cash flows maybe after 5-6 years. So if you look at their businesses, very few businesses now, the refining, etc., are generating cash flows. Rest are all in an investment phase, and the ROE, ROC is going to decline further over the next 1 or 2 years. So there's no scope of re-rating per se. It's just that the stock could get oversold significantly in any sell-off and could give trading opportunities. So my guess would be that long sideways consolidation without too much of upside.
2314. It's just been one of those stocks which has done precious little in terms of the market movement. Okay, the big story for me, I think, is the following. Bond yields have reversed. When I say reversed, they've hit a peak globally. Nifty has respected key levels in terms of the market positioning and from where the support was warranted. C, crude prices have retreated and they've not gone to $100 per barrel. In fact, the natural course for crude, I think, is more down rather than up, given that, China is not consuming. There is a forced production cut by OPEC to just maintain demand. And then on top of that, you've got GRMs which have plummeted, which means that the real product demand is not that high. So the reversal, what let's say happened between September end in the global markets and the first week of October in the US bond market, the dollar index, the crude, and the 10-year paper, all of them now are now either the uptick is either pausing or they're retreating, which means, Sandeep, it's a matter of time. We don't know, we can't say with certainty, but when macro will start reversing, the flows which have departed from India, I'm talking about FI flows, they will have to make a comeback. I mean, history has told everybody, Sandeep, that when you buy when FIs are selling, sooner than later you're always rewarded.
But FI has been selling for a long time, but markets in India have not corrected. So the key challenge is not that. The challenge is that when US 10-year bond yields are at 4.7%. So for a lot of investors, it makes sense just to not take any currency risk and invest there. For example, Nifty YTD in India is up around, I think, 8% odd, and the rupee, if I'm not wrong, has lost a similar value. So for a dollar investor, they have actually made no money in India if they were investing in the large cap basket. I think that's the uh, global fund flow picture. I don't think it's going to reverse very rapidly because bond yields are unlikely to come down globally very soon. So, but domestic flows picked up so substantially last month, like the mutual fund flows are nearly 20,000 crores. Let's see what happens for September. So overall flow picture is okay, but foreign investors are unlikely to come in soon enough.
Okay, but Sandeep, what's leading to the FI selling? I mean, is it just a correlation of what's happening with the yield?
Yeah, it's just that because when you can make risk free nearly 5%, why do you want to take risk on currency and try to make 2-3% extra? So I think that's so there's a reallocation happening, and the dismal performance of the Chinese markets has also created negativity in the emerging market basket because a lot of flows are ETF flows, and I think emerging market ETFs are getting redemptions.
Okay, just minutes left to go before we kickstart the trading day today. A lot of stocks which are going to be in focus. This Tata Motors, wherein the JLR Q2 wholesales figures have come in higher by a good 29%. The free cash flow guidance has been set at £300 million, and that should keep the street pretty excited. Bajaj Finance, of course, like we highlighted earlier, the board has approved that 8,800 crore rupee fundraising via the QIP route. A total of 10,000 crore rupees is what they're looking to raise. And that is one stock which is in focus as well. Sun Pharma, they're looking to acquire a nearly 38% stake in Ezerx Health Tech for about 28 odd crore rupees. Small acquisition, but a meaningful one at that. And then there's Lupin as well, which has got a tentative US FDA and a nod for one of the tablets as well. Sandeep, what's the call on pharma? I mean, DRL has been an erstwhile favorite. What's next on the radar?
In pharma, we own Sun Pharma and Lupin. I think there the story continues to be the same. Sun Pharma is a steady performer. Lupin is coming in from years of poor performance and now much improved performance. Everything seems to be going well for them. So we continue to hold that from lower levels, and I guess should do well over the next 2 years also.
Okay. Kunal, pharma has been more like yes, no, yes, no, yes, no, I don't know, sometimes yes, sometimes no. It's not been a linear rally. It's been a patchy rally.
Yeah, if you look at this in the last 3 years, then yes, maybe
no, like from last 3 months, you saw a spike and then volatility has come back.
So the only reason why this is happening, Nikunj, is because the large cap stocks are not participating in the same gusto as with respect to the mid cap names. So you look at the price performance, for example, the likes of Glenmark Pharma, Zydus Life, Oro Pharma, in the last 10 months, 9-10 months broadly. Now you try and compare this with the price performance of the likes of maybe Sun Pharma. It's a very muted kind of a price action. So I think if I'm not wrong, the likes of Glenmark, Zydus Life, I think at their peak they were up some 70-75%. From their previous major swing lows, and I think in that respect, Sun Pharma has done maybe around 20-25% broadly, and Dr. Reddy is also in a very similar kind of a price uptrend. So that's the only reason why, because the large cap stocks, pharma stocks are not participating in the same price momentum as compared to the other mid cap names. That makes the trend a bit more, difficult to try and fathom. But I would strongly believe that many of these mid-cap pharma names are actually looking very attractive. I would still be very bullish on the likes of Zydus, Glenmark, even Biocon, for example, at 260, 270 levels. I think it's looking very attractive given the prospects of the charts over the last 2-3 years, where the stock had corrected from 450 odd levels towards the possible prospects over the next couple of years.
Naresh, I'm just picking one out of the one random name out of the box, and that is one of the biggest multi-baggers of last couple of years, Escorts. It's at 200 now, Naresh.
So as of now, the move looks overextended because the rest of the names in the sector have not gone up this way over the last 6 months. But trend remains positive. So for now, one should be looking at it as putting a trading stop loss. The last swing lows are at 3,050, 3,100. Once it breaks, that would be a trend change. And the fact is the stock has gone through that period of huge move multiple times and then has a tendency to go sideways. So if you go back to 2022, also after making a peak around 2200, it just stayed there for 6 to 8 months. So I think whether it tops at current levels of 3350 recent highs or at 3600, we are at the upper band and we could be getting into a multi-month sideways correction or a dip from here on. So I would not be looking to buy the stock at this levels, but maybe look out for a reversal to short.
Okay, let's take stock of some of the mid-cap strategies as well, as we are now hitting the pre-open rates. In fact, it's a smart start actually, marginally higher, but that's exactly what the GIFT Nifty as well was indicating, pretty much in line with the rest of the globe, as also the US handover too. The Nifty is now almost around that 19,600 print. But Kunal, what about mid-cap ideas?
So that's a buy on one of the stocks which I discussed earlier, Anantraj Industries. Looks very strong. The stock is back again at a major multi-year high. I think it's about to cross the 240 levels, which could take the stock back towards a 15-year high for itself. So that's a strong chart, building up quite well over the last many months. And look out for target of 242, stop loss 226.
Right. Naresh, what about your mid-cap strategies?
So that would be a buy on Sun TV with a stop loss at 610 and a target price of 700. The stock looks very interesting. It's made a move from 430 levels in June, July to 600, 620, then consolidated, took a dip to 580. Now has started making a high above that 620 mark. That was the high back in September 21. And the stock used to have this high back in 2019 as well. So it looks like a 3 to 5 year breakout here. And it has been a surprising move recently. And now we are seeing a follow-up into a 3 to 5 year high. Volumes have been good in this move, so could surprise in the short term.
Right. Okay, let's tell you what else is happening outside the world of equity markets. In the US Securities and Exchange Commission, or the SEC, has sued ex-chief Elon Musk to testify over his purchase of Twitter last year. Broadly, the SEC has said that the case is tied to Musk's purchase of the social media platform and the stock trading surrounding the acquisition as well. Taylor Swift's Eras Tour has broken records before it even hit theatres. In fact, within a week until the movie comes on the big screen, it has surpassed $100 million worldwide in advance ticket sales alone. Swift's concert film opens in theatres on October 13. And back home, as rescue operations continued in North Sikkim after a cloudburst triggered a flash flood in the state, the death toll has now reached 19, while over 100 people, including 23 army personnel, remain missing. Rescue operations are on currently in the state. And closer home, at least 6 people were killed and 40 injured after a massive fire broke out at a 7-story building in Mumbai's suburban area of Goregaon today. The incident happened around 3 a.m. Several two-wheelers and cars were also gutted in the fire as the blaze broke out. And India's in-form opener Shubham Gill has reportedly tested positive for dengue. Another round of tests will be conducted later in the day today, but it is likely that he could miss the World Cup match against Australia, which is slated for coming Sunday.
All right, let's go to Sharad to get all the khabar on Dalal Street this Friday morning. Actually, it's already Friday. TGIF, Sharad. Thank God it's Friday already.
Yes. And stock in focus is Westlife Food World. Now the company is having the franchisees coming in for the southern and the western India. And the khabar is that the company is looking to have a makeover for the McCafe brand. Now, of course, do remember that 2 important things are there. The buzz in the street is they're expecting that there would be an increase in the food offerings and also the more innovations coming in their core offerings. Now, when I talk about the core offerings, 3 products come in mind. These are the burger, chicken and the coffee segments. And overall, if you look at the Q2 numbers, it's expected that they would be under pressure, and this is mainly because of the demand stress coming in and also an inflation impact, and that is why the SSG numbers are expected to be muted for the second quarter. But for the third quarter itself, there is a sliver of hope as the inflation is expected to decline, and secondly, an important thing is the new launches was there, which is expected to revive the demand, and of course the festive season, and which is also coinciding with the Cricket World Cup, that would be also in focus. So Jubilant Food World should be in your radar today.
Yeah, all these stocks have already been buzzing quite a fair bit. In fact, let's revisit some of the stocks that Nikunj spoke about earlier today.
Before IL&FS crisis, all NBFC stocks were going through a sugar rush. And at that point in time, Bajaj Finance was enjoying a pedestal positioning. So 2013 to 15 or 2012 to 2017, you would say that there was a peak bull market in NBFCs. And if you compare the valuations of Bajaj Finance at the peak of the bull market versus now, the sector has changed and Bajaj Finance has emerged as a formidable player, and their balance sheet and their return ratios have improved, but valuations are lower. So it just tells you that the markets right now are not really chasing Bajaj Finance as a stock, even though the repute of Bajaj Finance as a company or an NBFC which has survived the storm, I think is something which is evident now. So growth capital coming in, attractive valuations, or not attractive valuations, but valuations below the historic average. These are factors which in the near term will actually propel Bajaj Finance higher. So if you own the stock, please don't sell. If you want to buy the stock, well, the time to buy a stock like Bajaj Finance typically is that when market goes through a temporary disruption, which is what happened post Ukraine war, post what we saw when there was a huge FI selling at the beginning of the year. It may not be the best time to buy cherry consensus, but it is a stock where you certainly don't want to sell. It reminds me of what HDFC Bank did between 2005 and 2020. The banking sector per se went through a mess. But HDFC Bank, they kept on surprising us. Remember, Ayesha used to say, number kahan se aate hain? No NPA problems, formidable growth. They kept always 30% growth, no NPAs. There was a problem in the steel sector, there was a problem in the electricity sector, but HDFC Bank and Kotak surprised you. I think that is what Bajaj Finance is. I mean, history repeats itself, but it's only, courses remain the same, horses change. And that's the situation for you. The course is India, and the horse earlier was HDFC Bank, now it is Bajaj Finance.
Let's take stock of all the index calls coming in this morning, and let's start off with the Nifty call from both Kunal as well as Naresh and Kush Bora. Kunal is actually recommending buying the Nifty this morning, and it's a hold from both Naresh as well as Kush. So pretty much a consensus for the hold recommendation coming in this morning. What about the Nifty Bank? Pretty much a similar call, a buy from Kunal. Naresh and Kush are recommending a hold.
All right. I think Kunal had a buy on Avenue Supermart 2 days ago.
Yeah.
What has changed for Avenue Supermart? It's still like a 3,500 rupee stock.
Yeah, but the indicators, Nikunj, so what happens is when a stock goes into 1 or 2, 3 years of uptrend, and post that, I think if these stocks go into a 2 years of further correction where these stocks half or maybe correct by 30-40% kind of a margin, so it completes two important phenomena. One is a time-wise correction for these stocks after a sharp uptrend, and the other is a major price correction which has already happened for for DMart. Now, on the other hand, in the last couple of days, the stock had retested the 200-day moving average, bounced off from the 200 DMA, and is now trading above those levels. So this is again a reinstating of fact that the longer term trends on the downside is reversing, the short term trends are looking more positive, as well as the stock is holding above the long term averages. This, I believe, could be a strong case of a turnaround. So my sense is that the stock should not just, we should not be looking out for just 4,000 as a round figure target for DMart, but I would probably believe that the stock has metal to even go back about that 5,400, 5,500 mark, which is the all-time high.
In how much time?
In possibly the next 6 months or so.
Wow.
Yeah. Oh, okay.
Ayesha, the retail sector in India surprises me, okay? What is the average valuation give to a value retailer. See, Avenue Supermart is a value retailer. You compare that with a Costco. You compare that with, and by the way, original thoughts, no borrowed thoughts here. We're just looking at data in the morning. What is the Walmart P multiple? These are in mid-teens, early 20s, right? What is the P multiple for Avenue Supermart?
Much cheaper,
60, 70 times, right? Then you have a Trent that is trading at a P multiple of 120 times, one of the most expensive stocks in the world, but that is Indian retailing sector for you. Then you got Aditya Birla Fashion. Again, it's not delivered, but the P multiple is still north of 30. Then you got Ethos, luxury watch. Don't even talk about the P multiple there, 40, 50 times. Okay, it's a very small and a very niche sector. But that is the way how it is. And the valuation then on top of that, what Reliance Retail has just got. These are from, the public market sovereign funds who have a multi-year view. And there is a report which you mentioned in the morning about a listing perhaps at a valuation of more than $100 billion. So the Indian retail sector is actually absolutely mesmerizing, considering this is one sector where you got a success of a Trent and a DMart, and you got a failure of a Future Group. You got Birlas with move into the retail sector with the advent of more, and you got Subeksha which actually went belly in 2008. It's such an interesting sector, and the valuations here are so expensive, and that just tells you that markets are telling you where the Indian middle class consumer is moving.
But just that Avenue Supermarts can't be compared to the same consumer who goes to Trent stores.
So Trent has a business called Star Bazaar, and it is not as large as what you actually have. You're absolutely right. I mean, Trent has got Zara in it, and Trent has got West Side, but
it's a very urban-facing,
semi-urban. So you're absolutely right.
Yeah.
They're not into sabji bhaji.
Exactly.
Let me put it this way. DMart is, but DMart can then again be compared with what a Walmart is doing. Right? I mean, ultimately, it's about value retailing.
Costco,
Walmart is Costco, Walmart. But what are the P multiples of Walmart? What are the P multiples of, for example, what are the P multiples you have for DMart? In the COVID time, a lot of retailers actually went belly up globally. But in India, that did not happen.
Yeah.
So I'm just putting a point out here is that where the Indian retail sector is, by the way, markets are about to open. Okay, let's focus on that. You got a credit policy. You got a market which has bounced from the recent low. You've got the risk indicators which globally have reversed. And Nuresh and Kunal are of the view that if we get a little bit of help from credit policy, a smart bounce in mid-cap, a smart bounce in Bank Nifty, then bulls could be, powering the market ahead. So Kunal, like they say, all of us are watching Asian Games right now. So at the beginning of the race, it is on your marks, get set, go. So right now, bulls are on their marks. They are ready to go. But the go will only happen after credit policy if you get a little bit of push, right?
Absolutely, Coach.
And if the go is pushed, then the race to 20,000, could it be a matter of days or weeks?
Very few days.
Very few days. So it could be a 100-meter dash if we get a little bit of support from the Bank Nifty.
Exactly.
Nuresh, is it on your marks and get set, go for the bulls again?
So as of now, I would keep myself waiting for price action to confirm, because globally we are yet to see that. So if we get global support, we could be looking at a new move coming forward over the next few sessions. So once we see a bounce in US indices, it would be a confirmation.
30 seconds to go. Truncated week. And Friday, TGIF, India-Australia match on Sunday. So yes, we all know that what India would be doing on Sunday. Actually, by the way, if you think about all those so-called cricket stocks, whether it is Zomato or whether it is Jubilant Foodworks or whether it is
Sun TV.
Sun TV.
We forget about that one.
I mean, Sun TV's got nothing to do with
IPL
cricket,
exposure,
IPL,
nothing with World Cup, but yeah.
Yeah. See, media channel is coming back, Ayesha. I mean, we'll talk about it when let the market rates establish. But media stocks per se, with the disclosure that we are BCCL company, which is a media company. All right, it's a good start. Lot of green on the screen, You want to see a start like this, where the market breadth is 1:10, 1:11. That is a powerful start in itself, that the market breadth is off to a great start. Ahead of credit policy, the Bank Nifty, the Sensex and the Nifty, all of them are off to a great start. Crude is down, yields are down, banks are up. Very, very simple to understand. Now, we've seen some short covering. We've seen a little bit of scare in the bear camp. But is it convincing enough for them to run for cover? I think that will be a function of today's credit policy communication and the move after that. Indigo is saying that we will charge you more if you fly with us because ETF prices have gone higher. Now that ETF prices have gone lower, will they reverse that taxes? That's pricing power for you, my friends. If they go higher, companies will say it's because of raw material cost. And when raw material costs they reduce, and if they are confident that demand will be sustaining, they will not cut everything back. But for you right now, Indigo is flying high at 25.50.
Yeah, but the Singapore GRM fall all the way to $4.45 per barrel versus the recent high of 15.4. That definitely must not be spelling good news for Reliance Industries, for HPBT IOC, or for that matter, even for MRPL or Chennai Petroleum, although you're not really seeing much of a damage coming there. But yeah, that continues to be something that you may want to look out for. Bajaj Finance, what's that big boy up to? The board has now approved a fundraise of in total 10,000 crore rupees, 0.5% higher for Bajaj Finance. 78.90 is where that stock is currently sitting at. GCPL and poor commentary coming in from there. The second quarter update is also hinting at a low single-digit organic sales growth versus which is weaker than what the market was anticipating. And that's really not going down well with the likes of GCPL. Marico also came out with a disappointing second quarter update. So these stocks are in focus. Tata Motors, the JLR Q2 wholesales are up by about 29%. Free cash flow guidance of £300 million. Tata Motors, 724 is where that stock is right now. Ujjivan SFB, that's come out with its quarterly update. Total deposits have seen an uptick of 43%, CASA up 27%, stock gaps up 3.5% right now. Kalyan Jewellers as well, wherein the India operational revenue growth has come in at 32%, 3.5% higher for Kalyan Jewellers as well as we speak right now. And then Nykaa too, wherein the beauty personal care business is likely to see a net sales growth of 20%. The street is liking at least that much, 2% higher for Nykaa, almost touching that 150 odd mark in trade. That said, let's also check in on what HDFC Bank, Infosys, Axis Bank, the kingpins from within the Nifty are up to. HDFC Bank marginally higher, Infosys 0.5% uptick, TCS will come up for you on your screens next, Axis still pretty flat. Kunal, what's the take on the index? We're already looking at 19,600 here.
Yeah, so I think it's a good start. We've opened with a gap on the Nifty, so that also is a strong confirmation that maybe the trends are still positive for the index. We'll again wait out for the event to pass by, and hopefully the index is sustaining about the 19,600 mark by the end of the day. In terms of opening trade, Bajaj Auto is something which looks attractive. So that's a stock which even yesterday managed to make a decent comeback. It's holding on towards a key support point, even of a 50-day moving average. So that's a stock which I look to trade in the opening.
Right. Naresh, what about your opening trades?
So that would be a buy on Sun TV, which gave a breakout yesterday. It looks interesting at 625 to 632 levels. Could see a breakout moving forward.